Well, we told you just a moment ago about Treasury Secretary Janet Yellen's supply chain comments earlier this morning on worldwide exchange. She also weighed in on President Biden's social spending bill and the companion hard infrastructure bill. Yellen said she's hopeful that they can pass both from Congress next week, but it's unclear whether the current pay-fors in the social bill will stick. We just learned yesterday about some new taxation plans for high earners. And for that, who else to bring us the story but Robert Frank? Robert Frank, good morning.
Good morning, Andrew. Well, there were a lot of ideas and proposals that did not make it in this plan, but the new tax framework is still a $1.2 trillion tax hike on those top earners and some of the highest rates in over 40 years. Now, the biggest change is that new millionaire surtax. That's the extra 5% on income over $10 million and 8% on income over $25 million. So all in all, the top marginal rate goes to 48.3%. That is the highest since 1986. Now, if you look at New York City's top earners, the combined city, state, and federal tax would be 63.6%. California, you're looking at 62.1%, and New Jersey, 59.6%. Now, the millionaire surcharge also applies to capital gains. So if you sell a family business or investment, you could face a top capital gains rate of 31.8%. That is also the highest in 40 years. Now, since many states also treat capital gains as ordinary income, if you look at New York and California, the combined rate for capital gains would be over 45%. Now, there are only about 24,000 taxpayers who report income of more than $10 million. So we're really just talking about the top 0.02%. But these guys and women account for a large share of income and taxes. More than a third of capital gains realizations are by those over $10 million. Andrew?
Are you expecting a lot more moving among those folks that you just mentioned?
I mean, the big unknown here is what's going to happen to salt. We heard yesterday different people saying different things. They're going to include salt. They're going to do this maybe 2-year horizon for salt. So we get more salt, then less salt, and then more salt again. So it all depends on salt. If there's no change in salt, absolutely, for these hedge fund guys, these private equity guys, these big investors who live in New York and California, you're looking at rates of over 60%, over 63% in New York City. Absolutely, that's going to cause more pressure on these people to move to lower tax or no tax states.
Shepard Smith here. Thanks for watching CNBC on YouTube.